Hello and welcome back to my channel. My name is Adejoke Raji. I am a content creator here in Lagos, Nigeria, and I film everything and anything around consumer protection and lifestyle. If you are seeing this face for the first time, click the subscribe button because I know you want to keep seeing this face, okay? Watch this video to the end. If you learned a thing or two from this video, give this video a thumbs up, share to your friends and family, particularly those in their 20s. Be sure to comment. I would really love to read from you. Today's discussion is about investments. Let me put this disclaimer out. I am not an investment expert. I just want to share with you the power of investments and investing early. Now, let me share with you a story I read about two investors on Forbes. Investor A, let's say Investor A started investing at the age of 19, $2,000 every single year until he was 27 years of age, and then he stops. Then another investor, say Investor B, started investing from age 30, the same amount, $2,000 every single year until it was 65 years of age. That's for like 35 to 36 years. Making a comparison between both investors, Investor B ended up with a lesser investment portfolio as compared to Investor A. Why should you start investing? Currently here in Nigeria, the value of our naira keeps depreciating, yet inflation is on the rise, which is why I always say that savings is good, but investment is better. Last week I discussed tips on how to adopt a good savings culture to meet up with your plans for the year. If you haven't seen it, I'll link it up in the description box so you can go check it. But always trust inflation to destroy whatever savings you've had. Also, investment is good. It's a good retirement plan. There are different types of investments for the purpose of beginners. But before we move on, I want to share with you two important tips that has always been my guide in every investment decision that I want to make. Tip number one is only invest in what you understand. Tip number two is some investments require certain level of risk as compared to others. So know your tolerance level when it comes to risk. Number one, fixed deposits. This is perhaps one of the most simplest forms of investment. This not only assures you as an investor its interest rates, it also guarantees a capital plus profit at the end of the period. Note, this can be locked up from months into years. However, there are penalties for early withdrawals. This is to say that if you have probably a huge sum of money sitting somewhere, you just have this money that you are not using, and then instead of keeping it in your savings account where all the various bank charges will eat it all up, you can decide to go for this option by locking it up in a fixed deposit account for a certain period of time whereby you make money off it. Number two, stocks and shares. This is a unit of equity ownership in a corporation which allows investors to participate in the success and sometimes the decision-making process. Shareholders have a claim on a company's assets in the event of liquidation, but don't own the assets. At the end of every business year, shareholders earn in dividends. Number three, real estate. You can acquire real estate by directly buying residential or commercial properties, or you can purchase shares in real estate investment trusts, where a group of investors pool their resources together to purchase properties and trade it like in the stock market. But the common one here is actually buying properties like land, houses, and so on. Number 4, investing in commodities. Another interesting one is investing in tangible commodities such as gold, silver, diamond, crude oil, agricultural produce such as cocoa, palm oil, and so on and so forth. Although I don't advise you keep this in your house, especially for jewelries, as it is important for you to distinguish between the purpose for which you're buying it. Is it for personal use or for investment purposes? How much money do you need to start investing? 1 million naira. Okay, so that absolutely depends on you. You can start investing as much. You can also start little and then grow from there. You can have a fixed percentage of your, maybe your annual earnings that you put into investments. That absolutely depends on you. Except for stocks and shares, where you need a stockbroker whose charges could be a fraction of your shares or a fixed amount just for registration. And then for forex, you need a broker as well, but from the little experience I have, I don't think you need to pay any broker to register you. Then as for other forms of investments, it's absolutely free. Like, you don't need to pay anybody any money to help you with, to buy gold. No, you don't. So, and so on and so forth. In conclusion, there are various investment plans you could go for. You could invest in the forex market. There is also cryptocurrency. Although I really haven't gone into cryptocurrency, I really don't know much about it. But if it is one that catches your fancy, you can go into it. Like I said earlier, every of these investment plans comes with their own risk factors and challenges. Tip number 1, do not forget, don't invest in anything you don't understand. Number 2 is, have you checked your tolerance for risk? How are you able to tolerate risk and all that? Then the money involved, is this something you can always you get what I'm trying to say? Okay, so if any of the points that I mentioned here catches your fancy, you can go ahead and do more research on it. And this brings us to the end of this video. Thank you for watching up till now. Give this video a thumbs up if you like it. Share to your friends and family, particularly the younger ones. It's always important to start investing early in life. Don't forget to put your comments below. If you have any other investment plans that you've before now, you can always include them in the comment section, and I'll do well to reply. If you have not subscribed, please don't forget to subscribe. I'll see you in my next video. Bye.